Good morning, everyone. Welcome to the live show. We're back, and it's Tuesday. We're going to do a bit of a live show again. Let me just move this down so that you guys can see me, or see the charts at least, and we can talk a little bit about the markets again. How's everyone today? Hope you're all well. Hello, Elaine. How's it, Daniel? Good morning there. Welcome. For a moment there, I was looking at the thing and I was thinking, 0 people here, and then you're all here, just like that. So at least I know we can have a show. You know what? I'm actually not battling a cold, Daniel. You know what I'm battling is hay fever. Oh man, I've been battling the last few days with allergies here, so excuse me on that front. It's it's not a cold. It's just wow. When those allergies come, they come hard. So yeah, no. So yeah, no. If I had a cold, that would be even worse. That would be terrible. Yeah. G'day from Greg. How's it, Greg? Kokoro, good morning. Good to see you back. Still dark. Where's it still dark? It's nice and light here in Cape Town. It's for us, it's around 9:30. It's the morning one, and on Thursdays I usually start around 2:30. And it always confuses me because Europe is either an hour or 2 hours behind ahead and whatnot, and America, the different time zones over there. So I just go with what I got. Morning, Rob, and everyone in the house. How's it? Zed. Yeah. Hello. Yeah. Good morning. Good morning. Welcome. Good to have you all here. UK, Norfolk, still dark. What's the time there, man? Are you guys 2 hours behind or what? Yeah, I suppose it's that time of the year. I don't know. Yeah, of course. Of course. And obviously the sun only comes out a little bit later, and it's winter and all that. So for us, it's summer. Nice and warm, beautiful day. Everything's excellent. Having a good time. Really going well here. So, but yeah, allergies, as I said, Daniel. Struggling with that lately. That'll come right. Always does. Right, so yeah. Where are we? What are we doing? Okay, let's have a look at where we are. Okay. I was talking about the market coming down to take the money. How do you simplify that to someone? The best way I can simplify that for anyone, Daniel, is, the complicated thing is the market's looking for liquidity. Those are the fancy terminologies that everyone uses. Sorry, I am going to drink my coffee because I am trying to clear my throat a bit. So effectively, to simplify that and to make it more understandable for people is to say to people, don't think of it as the charts. The charts are just there as an indication as to where the money might be. And the money might be at a resistance level or a support level based on the fact that it's that's the area that it always goes to. Now try and take the charts out of your mind and picture it as a whole bunch of traders that are trading against each other, perhaps on the floor or something like that. And there are people that want to buy and there are people that want to sell. Think of it like a shop even. There's people that want to buy and there's people that want to sell. So when a price is coming down to take the money, that's a whole bunch of traders, buyers coming in to the sellers to come to them and say, we want to buy this off you. So we're coming to buy this off you. And the sellers are going, well, here's the price we've got. This is what we can sell it to you for. This is how much you can pay for it, right? And all the buyers come and they say, well, we'll pay that and we'll pay that and we'll pay that and we'll pay that. And all the buyers start buying that liquidity because all the sellers are standing there with it on a little silver platter saying, this is what we've got to sell. When you go to a market and all these people are sitting in the market and they've all got their little jams, their little wares and all their little goodies, and they've all got something to sell you at a slightly different price, but pretty much the same. And the buyers come in and they all come to the market and we've come to buy. Now that's the same thing as the market. When you see the candles going down to take the liquidity, that's all the little sellers sitting there waiting with their little trays of stuff to sell something to you. and you're the little buyers coming down there to buy all that stuff. And that's effectively what I say when price is coming down to take liquidity, or price is coming down to take some money. Okay, so that's how to simplify it. The best way I can simplify it for you is it's real life. You know, when you look at a chart, you don't see real life. All you see is the chart, and you're not really seeing the real life behind it. So, for example, this is coming down to take the money because there should be a whole bunch of little sellers here in the market selling stuff because they've left some money there. They've left some. There was a lot of money there to take in the first place, and it shot up, and there's still some left behind that hasn't been sold yet. There are leftovers that hasn't been sold yet, and some more that got added in because some more people came and joined in, and they want to sell some more stuff, and they're there, and there's some more for you to buy, and that's where it finds money, and then it takes the money, and then it starts going up. Because when all the buyers start buying, then all the sellers start putting their prices up a little bit because, you know, we can make more money out of this because there's so many people that want to buy this stuff, and then the price goes back up again. It's as simple as I can simplify it too, but if that makes sense, that's the best way to think about it. Okay, so good morning, David, from Johannesburg. I believe you guys have got it quite hot up there. It's I heard it's going to be like 42 in Harties in the northwest, and I'm pretty sure Joburg's not going to be much cooler than that, and Pretoria and all that. So it's hot in the middle of South Africa. It's quite warm in Cape Town, but we don't suffer with temperatures like that down here as much. We kind of, you know, for us, if we get up to 35, we're like, ooh, it's hot, you know. But yeah, up there, 42s and 45s can happen. And I lived through that as well. Also, I want to talk to everyone a little bit about investments today, but I'm also going to talk about fundamentals. And the reason I want to talk about that is because I've had one or two comments on it. So let's start with the investments. And oh, by the way, guys, the US 500 was my trade of the day today. I'm looking at long US 500 out of this area because there is an area of demand here. It's come in to take some money, and it's going out of there. So keep your eyes on that. That looks like it could go long. Unfortunately, yesterday's trades are not working out so well. They're not working out so well at all. But we stay in the trades, and we see what happens later on in the day. Whatever the case, see if they play out or not. But yeah, the US 500 to me looks like it's a good possibility of a long. And also I mentioned this morning, I think if you guys watched that video, the members video, where I noted that I've changed my view on Bitcoin slightly because Bitcoin was going long. It took the 100,000, it came back, long spike down. All the buyers came back in. You see there on the tail, all the buyers came back in to buy again. It's run along here and it's broken through the support, but it's kind of convincing this time with a whole bunch of little 4-hour candles coming out of that, what was support, and it's turned it into resistance. So best case scenario, there's some money up here, supply, where it might come back up, take it a little bit. I think it might just correct a little bit now. How far it'll correct, I couldn't possibly tell you. Could come down to the 90, could come down to the 80s, could even come down to the 70s. You know, Bitcoin's a kind of a difficult thing to call, and it's very volatile because you're not really trading on an asset value, you're trading against other traders. But I had 2 points of view when it got to 100,000. My one point of view was exactly what it's doing now, where everybody would say, well, we've reached 100,000, profit, let's take profit, let's get out. And the other view was that the buyers will continue to push it up. But they decided, let's take profit, let's get out. Everybody ran away, everybody ran scared. So it's correcting because it's profit taking. How far will the profit taking go? Depends how accelerating or how it accelerates. That will make all the difference to it at the end of the day. So investments, what I wanted to talk to you about investments, somebody said to me on a comment that yes, no, don't worry about the dividends. You should only worry about the growth of your investment. And maybe they didn't hear me correctly, or maybe I didn't explain it correctly. But they are right. But I don't think they quite understood what I said, or quite heard me explain it correctly, perhaps. Yes, obviously, how a share works if you're investing. And you know, my policy is you invest in a number of shares, and you keep adding every month if you can, and you invest for 10, 20, 30 years, and over time your investment grows. And what I said when I was telling people is it's great because you get the dividends as well. Okay, and you know those dividends, you don't even need to worry about the growth of your investments because those dividends actually pay you on a regular basis. But what you have to understand as well, guys, is that while growth is great, dividends are also great, but you don't buy stocks simply for dividends. You don't buy stocks simply for growth. You buy good stocks, right? You buy good stocks. Now, what actually happens with a share is when it's in its growth phase, there's either no dividend or the dividend is minimal because all the money is going back into the growth of the company. So in that particular company, you're looking for growth. But there will come a time when growth is stumped, when the CEOs and the board of directors say, well, what can we do next? We're kind of at a point now where we've done everything for now and we're not really have anything further to do this year. So now it's time to pay dividends. And then that company will start paying you dividends because they need to use the money. So they'll give the shareholders a dividend because that's what everybody's working towards at the end of the day. The people inside the company are working towards that, the directors, etc. You know, it's a dividend payment for them as well. So it's like a bonus or a salary or whatever the case. So that's what everybody's working towards, is that point when the company's so big that it just pays you. So to say that I'm only worried about growth would be wrong, and to say that I'm only worried about dividends would be wrong. So I think maybe I had explained it a bit wrong, and the person didn't quite understand what I was saying. But what I'm saying to you is don't just invest in growth stocks. Don't just invest in dividend stocks. Invest in good stocks. Invest in good companies, companies that you know are going to do well, that are doing well, or are going to continue doing well. If it happens to be a top-notch company that's been around for a long time, that does pay good dividends, so be it. If you don't think it's going to grow much further, either way, you're going to get the money. You can put it back into the company, or you can take it for yourself. Or if you decide that, for example, you are not going to go with dividend and you're going with a growth stock, then you know that that company is growing either way, and the value of your share price is growing with it. So, you know, it's much of a muchness at the end of the day. If you just invest in good companies, it really doesn't matter. Either way, it's going to grow. Either way, you're either going to get dividend out of it or you're going to get growth out of it. And normally, when it's in its growth phase, it's going to end up becoming a stock that's going to be a dividend stock in any event, and it's going to start paying dividend. What I say about picking dividend stocks is pick the ones that pay, the ones that have grown, the ones that are finished with growing, the ones that are not intending to grow any further. The good ones will pay you a larger percentage dividend or a better income or whatever the case. Now, the idea behind having dividend paying stocks is, the nice thing about it is you get income from it at the end of the day without even thinking about it. So if you've got a large amount of cash invested in a large portfolio and you get dividend payouts, it's just bonus. It's like having a nice income. There's a number of platforms that you can use for investments, Lawrence, and you know, and I don't like to name too many names. Most of the banks have got good ones as well. But what I am going to name the one that I've left a link to in the description. I don't get paid for it. You do. You get about $50 or something. That's great. But I've left it there for my South African investors. I see your name is Lawrence. So I'm expecting that there's a good possibility that you're South African. So go with Easy Equities. There is a link in the description. They are the cheapest. They are the easiest. And you can connect them to Capitec Bank as well. They're great when it comes to that. And you can invest in partial stocks. You can invest in anywhere in the world, America, UK, Europe, Germany, South Africa. It doesn't matter. You can pick your portfolios. They've got exchange-traded funds as well. They've got other investments accounts. So Easy Equities are at the moment, about your best in South Africa. As far as costs go as well, costs are amazing. So yes, Lawrence, I'm also based in the Western Cape. But easy equities are in Joburg. It's the GT247 guys. And the reason I actually use them in the first place is because I have a main portfolio with them for trading as well, which is GT247, which you can't connect it to. They're two totally separate things. So I opened an easy equities account based on I know the guys and whatnot. And, if you open a Capitec bank account as well, you can connect it and you can just transfer money from your bank account straight into the account. So easy if you need more cash, and you can move it through the world and all the rest of it. And it's very, very easy. So yeah, I left a link for you there if you want to get involved. Otherwise, you can find them quite easily and just invest some money with them. You won't regret it. Just put some money in every month for years and years and years and years, and you'll be surprised what happens down the line. It grows and it grows. But you can't really look at the portfolio every day. You can't really look at the portfolio even. I look at it once a month. I put money in once a month. And that's another thing they do is if you do a monthly thing with adding to your investments every month, then they give you better fees and all kinds of. You can read it for yourself. There's a whole bunch of nice things there that you get back for the things that you do, and you get cheaper buying costs and fees and all that sort of stuff. So, and there's no minimums and maximums and that sort of thing. You can go mad. There is a tax-free on the ETFs amount. Not sure how much it is, 30-something thousand, 36, I think. But yeah, you can have one of those as well, a tax-free investment account as well, but it's only up to a certain amount. But yeah, there's lots there. Go for it. They're about the best at the moment. I mean, I've got investment accounts with the other banks and things like that as well, and I just leave them. I don't bother with them that much. I prefer the easy equities. They're about the best at the moment, cheapest. So good day from Australia. How's it? Yeah, totally. But what you do with the S&P 500, and actually easy equities have got this. You invest in an ETF, exchange traded fund, S&P 500. Just choose the right one, and you can buy it and hold it forever. Look, it might be a bit high at the moment. I gotta say, I mean, it is high, but look, this type of thing, it honestly, it actually doesn't matter. Just turn this towards me. It actually doesn't matter whether you buy it now or if it corrects or whatever the case, because if you look at the US 500 over the last 99 years, it's gone up and there's been corrections. But my concern with buying into it fresh right now is it does tend to sort of go up and then sit, and it could sit for 10 years, at a level and then go. That's the only problem with it. It's already quite high, but, buying shares, the shares go up and they gain value and they pay you dividends and that sort of thing. So I prefer to buy the actual individual shares when I'm investing, for the simple reason that I do get that back. I do get ownership in that company, and I do get dividend payments back from many of the companies when their growth phase is over. So based on that, if you choose 5 to 10 of the best shares in that market, you shouldn't go wrong. And if you do see something going wrong, the nice thing about it is if you split it in, let's say you split it into 10 or 5, 10, let's say 10, it's a round figure, and one of them starts going wrong, it's only 10% of your account, and you can sell it up and you can move it into another better product or another better company and fix that problem. And you only have to fix a small portion of your account. It's like only one small repair. Whereas if it's all in the US 500, for example, then you've got a bigger problem, because then you're dealing with one investment, which it's great because it's probably the best investment in the world. You cannot go wrong investing in the US 500. If you invest in that and you leave it for 30 years, you will be rich. But all I say is it can be a little bit more daunting. If what I would do right now, if you said to me, tomorrow the US 500 is correcting and it's at 4,500, I'd invest everything into it. That's my feeling on it. It's just that it's at 6,000 already, and it's kind of like, okay, how long is it going to sit there? It won't kill you. I mean, in 30 years' time, it'll be at 15,000. I'm just saying, what are we looking at here? So I just prefer to invest in the shares, and I do have an investment in the US 500 on an ETF So yeah, it's great. It goes well. So as a South African, yes, S&P 500, most certainly worthwhile investment, definitely a worthwhile investment to go for. So yeah, I just thought I'd bring that up because I just think people kind of misunderstood me when I spoke of investments, and I said that when I spoke of the paper trading and such like, and yeah, I don't know. The things I spoke about, the guys didn't understand. They didn't quite figure it out, and they didn't work out what I was talking about. Okay, anyway. Fundamentals. Yeah, okay. Let's talk about fundamentals a little bit. Another question I got was, do I trade with the news? Do I trade with fundamentals? Why do I only trade with technicals? I do trade with the news. I do use the news as well. And like I said to you guys, I just don't hang my hat on the news anymore. I don't worry about the news as much as I used to. So, yeah, that was a question I got as well. You know, do you only trade with tech? Why aren't you using the fundamentals? Why aren't you trading with the fundamentals? I am trading with the fundamentals, but it's kind of complicated because what I look at is I used to wait every Thursday, every Friday, non-farm payroll, CPI, jobs figures, all that type of stuff. Every day there's a news item, as you know. Every day something's going down in the news. And I got to say that I kind of gave up on that. I kind of walked away from that in a big way because I realized that the news items were making spikes like this. And when you come back, it's just taken out your stop loss and wasted your time. And it all comes back to where it was in the first place. But when it comes to news, I do look out for bigger things. I do look out for big news items. And I will have a look at the news because it affects not only your investments, but it also affects your trading in the long run. So if something big is happening, that being more like wars or bankruptcies or things that are happening in a big way. And it's interesting to know, for example, Boeing lays off hundreds in Washington State and California. So that news item, if you were thinking of investing in Boeing today, you might stop and wait and think, let me read that news item, let me have a look at that. Asian stocks rise on optimism over China stimulus. The word China stimulus, that's kind of something you might want to think about as a fundamental. What's going to happen in the Chinese market if you're investing in the Chinese market. So when I talk about trading in the news, I do look at that kind of news. I do keep that in mind. But I trade what I see on the technicals because the technicals, basically what the technicals do is they show me what all the traders are doing with that news. So that's what a technical's all about. A technical will take that news, and that's a whole bunch of traders that are moving in that direction because that's the way they feel about that news that's come out. Preempting the news is a bad idea. Waiting for news to come out and then guessing which way it's going to go, because assumption is the mother of all evil. You assume that something's going to happen and it does exactly the opposite. And believe me, that's happened to me hundreds and hundreds and hundreds of times. So yeah, no, don't. Yeah, when you're trading the news and you're trading technicals, you've got to trade what you see. And you've got to understand that the technicals, as I always say to you guys, it's not squiggly lines. There's people behind that, and it's about what those people are actually doing. So what you're looking at when you look at these lines is you're looking at what the other traders are actually doing. What are they actually doing here? Are they working against some kind of news factor? What's actually happening here? So, that's where I look at the kind of fundamentals of things. I'm looking at the charts and I'm reading the traders. What did I read into this? I read into this that all the buyers rushed back in because they felt like they wanted to push it back up, or that this was a great deal, or whatever the case. Pushed it all the way back up. Here you read in, it got to 100,000. Now you're reading the traders' minds. What are they thinking? Are they thinking take profit because it's at 100,000? Or are they thinking let's buy more and push it up? 9 times out of 10, they're thinking let's take profit and get the hell out of Dodge. And that's what happened. So you're kind of looking at the charts and reading the traders' minds. It's something you have to get used to, something you have to understand over time. You get a feeling for it. You have to read. It's becoming a mind reader or a soothsayer almost, figuring this stuff out. Okay, so yeah, so Lawrence, yes, invest in the S&P 500. And good morning from Belgium. Welcome. Good to have you from Belgium. And Bladu, morning. Good to see you, Bladu. Welcome back. Good to have you back on board. We don't have many people on the show today, but it is that time of the year, and we're heading for the Santa Rally. I think on Thursday we should really talk about the Santa Rally and what's going to happen. And this is kind of happens every year, where it kind of sits around and waits around, and and you think, oh, there's going to be no Santa Rally, and suddenly it goes. So it looks like the US 500 wants to take money here, but as I said this morning, it's either going to take it here, here, or here, and then give us a bit of a run up, I think. I think the traders, because they know it's a Santa Rally, they will push for the Santa Rally. So you'll most probably find the buyers will come into the market. Now you've got to see, like this week, a lot of the big institutions or the big traders or the big banks and whatnot that have got trading floors and that sort of thing, those guys start to go on holiday, they start to go and leave, and they leave this market up to you and me for a couple of weeks, and then it's going to start pushing up. But there is a moment where a lot of them are going to sell out before they go and leave as well, because they're not going to leave. It's like us leaving a trade over the weekend. They're not going to leave all their trades in over Christmas. A lot of that stuff will be sold out as well before it goes. Good morning, Wendy. Welcome. Good to have you. Good to see you. At least the viewing's growing now. I guess it is dark in the UK, and it's it's cold, and you guys got to get up early to watch a show like this. So I could start the show later. I can also look at that, but I'll see how we go. See how we go with that, and see if that works out, because I am starting pretty early. But I mean, okay, so we started. For me, it was 9:30. So if you use like 7, 10 o'clock would be 8 o'clock. 8 o'clock's a good time to start your day. I know there's a lot of traders out there that get out of bed at 4 or 5 in the morning and prepare their day, and there's others that start at 8 or start at 7, start at 7:30, and there's a lot of you that have to go to work and that sort of thing. So that also does make a difference, because maybe it's more part-time for you guys. So that's always complicated, eh? Okay, so yeah, Daniel, January. Historically, January tends to falter a little bit, but there are many Januaries where it shoots up as well. So, what you expect is kind of the Santa Rally and then a little bit of the pullback. But I think this January, what you've got to look at with the changing of the guard in America, the changing of the guard, the people seem to be very happy with what's happening there and with who's in charge, with the finances. I'm not talking about all the politics and that sort of thing. Heaven alone knows what's going to happen with that. But as far as the financial side goes, it seems to be that most people are very happy with the Trump administration in the USA. So I'm kind of looking at it remaining bullish. I'm kind of looking at a bit of a push here. So I'm not going to call it short. I'm not going to say, oh no, big correction in January. But be wary, January normally does give a little bit of relief. Normally does come off a little bit. So just keep your eyes open for that. The politics will have an effect though, and they're going to have some kind of effect. And then somebody asked me to make a liquidity sweep video. And to be honest with you, I'm not going to make a liquidity sweep video, because we don't trade liquidity sweeps. And, I think it was the same person asked me to make the crypto video. I made the crypto video, and I'm pleased that I did that for you. But crypto video is also, nobody's really interested in it. I can see by the amount of views it gets, this is not a subject line that people are interested in. So we won't be going back there soon. It's not the most important subject topic that people want to learn about. So if I'm gonna try and give people information, at least it's got to be worthwhile to a larger group of people. If people aren't interested in that subject line, then what's the point? And I just don't think that a liquidity sweep is really going to be that important to people. It's a very small group of people, I think, that use liquidity sweep. I think it's an ICT thing. I'm not sure. And no, actually, it's not. It actually comes from way back. Even the Wyckoff effect, I think, did know about liquidity sweep. But so it's actually just, it goes one way, cleans up, comes down the other way, cleans up, and then you can take your trade. It's basically, if it drops below that level at open, then you can take that trade. But I don't trade at open. I don't trade the 5-minute charts. So I'm not looking for liquidity sweeps at the end of the day. If I was trading 5-minute charts, I was trading at the open, then I might look for something like that. But if you really want to know about liquidity sweeps, I'm sure you can find a video out there that'll give you all the ins and outs of a liquidity sweep and the best way to trade it. But it's actually just the basis of when the market opens, it goes above the high, comes down, goes below the low, and then you take the trade. It's a sweep. It just cleans up all the orders, all the money that's sitting there. That's all it is. But that's also like pulling the wool over your eyes. It's like something someone made up in a system. Like I said to you, all the systems work, but it's just another one of these like make you feel better about your trade things. It's actually not something that will prove to you that something's going to work. What it is something that happens on a regular basis. What we call a liquidity sweep is just something that happens when the market opens on a regular basis, let's say. It's nothing special. Okay, and it's not gonna make you a successful trader. I can tell you that now. You might think it will, but it won't. In one word, Lawrence, my trading strategy is price action. That's it. Price action. I look at price, I see where the market's going. That's it. As you know, I trade 3 ways. I trade with a trend, I trade in a range, and I counter trade. That's it. I use support and resistance for direction. As you know, we just use it for direction to see where the money's being taken. The supply and demand, I actually just add into my trading. Because I take support and resistance from the day or the weekly. But the supply and demand I'll take from the actual time frame that I'm trading on, whether it be the 4-hour, 1-hour, whatever. And I'm just looking for money in that area. So for example, here we are in the US 500. We've got a trend to the upside. You could draw the trend lines in here if you want to. I just didn't bother. And you can see now you're in that daily trend and you're in the 4-hour. Where can I take some trades? On the 4-hour, there is a level here of demand of money. There's some money lying here that you can pick up and take. I just add it in as I go. And that's, and if you keep it simple, you'll be more successful. If you start overcomplicating it, then you're gonna start adding in liquidity sweeps and fair value gaps and all these fancy things and whatnot. I am going to show you guys how to trade Fibonacci. I'm going to do a video on that for you because I believe Fibonacci fits in very nicely with our price action. It fits in very nicely with our support and resistance. It's something I used to use in the old days. I don't really use it that much anymore. But, someone did ask me about it, and I think it'll be a nice video for you guys so that you can understand a little bit more about it. It's a lot to do with the numbers in the universe and that sort of thing. But at the end of the day, it actually does often play a confluence into what you've got here with regards to support and resistance, supply and demand, and that sort of thing. So if that answers your question, Lawrence, yeah, I trade with price action. I look at the price. I draw these things in just so that I can remember where the lines are. But sometimes I don't even draw things on the charts. I just look at a chart and I kind of understand where it's going. It's a basic pattern in your mind that you can see, and you'll learn that over time. How's it, Peter? Welcome. Yeah. Lingo, yes. And that's the word I'm looking for, Lawrence, is this confusing lingo. I think I mentioned it in one of my recent videos now. is people go on a course that they pay thousands of dollars for, right? They go on these courses and they learn to trade. And obviously, if you go on a course, you're going to learn all the squiggly lines and it's going to be quite easy. You know, you're going to come back thinking you're a genius because you've learned all this stuff. And people like the ICTs and all these guys, they teach you all this lingo and all these confusing back-end names and all this rubbish. And you come back with all this stuff and you think now you know everything about the stock market. And then the minute you go and put real money in, everything changes. It changes really fast. Then you suddenly realize that it's not about the lines. It's not about the system you just learned. It's about you. You're the factor when it comes to winning or losing here. And that's when it all changes. And that's why I teach you guys that strategy in every single video, the business plan of how to make and try and be profitable in the market at the end of the day. Not to dollar cost average. And it's not about the lines. It's about how you approach it. Now, the only reason I show you a price action system, the only reason I show you a support and resistance system is so that you can have a high probability trade. It's not so that you can, that's not going to make you win in the market. What's going to make you win in the market, like I always tell you, is the way you approach the trading. That's the only way. There is no other way. No other way. Simplicity always works best because when you can understand what you trade better. Yeah, no, totally. It's the only way at the end of the day. Ooh, it was fun. The trader account's getting whacked today, and I've only got 2 trades open on it. And that is the US dollar, Japanese yen, and the JAP 225. So can you see what I've done here? I'll put 2 trades in the same region, one on Forex, one on the index, and that's probably the wrong thing to do because they're probably going to go the same way. So if it goes wrong, it's going to go wrong double. Yeah, that's normally the case. That's normally the problem. But yeah, we'll see what happens. We'll see how that goes. Anyway, I'm still quite confident this US 500 is going to go long, so I think we might end up taking a US 500 trade. I just want to see what's going to happen with that little candle there because it's very, very small at the moment. In fact, it's minute. So it's not really giving us a clear indication. It hasn't really pulled back much, but there is some money here, but I don't know how much. It doesn't look like a lot. I'd actually prefer it if it drops a little bit further and gives us a little bit of a better level down here, because then at least it comes into a sort of what was a resistance, sort of now support level, and gives you a little bit more strength, let's say, of a purchase at around the 6,000 levels. Would much prefer that. This is a very light sort of trade. But yeah, that's it. We'll see how that goes. A lot of people, starting to notice it. You know why it's confusing if you have too many systems on the go, or if you overcomplicate your trading, is because you start working against yourself. That's as simple as it gets. That's why I'm trying to reiterate over and over again that the factor in your trading success is you, not the squiggly lines. It's you. So the more complicated you get, the more you tend to fail because you're working against yourself. You know, if I put a whole bunch of lines in here and I say to myself, this looks like a good buy, and let's say I was going to buy it right now. Let's say I said, I'm going to buy this. There'd be a whole bunch of factors here that would say to me, no, you can't do that because this is crossing there and that's crossing there and that's doing that. It's almost like having another trader in the room telling you you're making a mistake. Then you don't take the trade, and then it does go that way, and you think, oh, why didn't I take that trade? That's the problem with trading, and that is the problem with overcomplicating your trading, is you convince yourself that you're wrong rather than taking the 50-50, because we all know it's 50-50. It's 50-50. Whichever way you go, it's 50-50. The basis of trading, as I've always said to you guys, is to manage the 50-50. To actually manage the 50-50. Then you'll get it right. Once you understand that there's a strong possibility you're going to lose, once you understand that the markets are 50-50, no matter how many years you've been trading, I've been doing this for 30 years, guys, and I still get it wrong. What do you think you're going to get it right in a week? It's just, that's how it is, guys. That's how it is. It's a 50-50 game. You got to manage the 50-50 game the best way that you possibly can, and then you can make some money out of it. That makes sense to me, and it should make sense to most people. And overthinking kills momentum. Yeah. Something very interesting that's coming up in the markets now is this instant funding. I don't know if you guys saw it. These are the evaluation challenges. This is instant funding. You guys know that I normally trade with cash. This is just the funded trader account that we opened to play around with, right? And we're just playing around with it for these videos, and also to see if it was possible to do to keep it alive, at least with our system, which we are. But it's interesting. What I also notice here is you get a standard and a pro, that they're different prices. But this is instant funding. But I see the max daily drawdown, is 3%, and the max overall drawdown is 5%. So just be careful of that, guys, if you get involved. And then on the pro account, max overall drawdown 3%. And guess what? On the pro daily drawdown, none. They're going to close your account if you ever fail, if a day goes to zero. So no, dudes. Instant accounts are a bit tricky, eh? If you really want to try it, funded trader markets, I left a link in the description. But guys, I'm very, very worried about this instant funding. At least on the evaluation challenges, you've still got this 10% and 6% and 4% daily and that sort of thing. But then, of course, you can't make any money out of it. This instant funding thing is really weighted heavily towards the funded accounts. So just be wary of that if you are getting into them. Look, these guys, at least you're allowed to have the trades overnight, over the weekend, and trade the news and that sort of thing. But that sort of thing, that's a bit scary. No, I'm still in the challenge phase, Lawrence. I haven't even qualified on that account. I concentrate on my cash accounts. I don't concentrate on that at all. I have it for fun more than anything else. And no, there's no payouts. No, I haven't even qualified to get a payout. And I don't have an instant account. I did not take an instant account with these guys because they weren't available when I took the challenge. I've just got the evaluation challenge. And we haven't even passed that yet. We haven't even got through it. I've kept the account alive, that's all. But I haven't really bothered with it. And it's more important to me to keep my real accounts alive. That's where the money is at the end of the day. The funny thing is, it's great to have a funded account. But this drawdown thing here, just bear in mind, okay, that if I open a real account, so let's say you open a $100,000 account, right? So $100,000 account is $769. And your max overall drawdown, or your daily drawdown, is $3,000. So effectively, guys, if you've got $3,000, you could open your own cash account and trade it. And yeah, just be aware. You can trade with cash, on these amounts. So on the evaluation challenges, I mean, okay, it's fine. It's much of a muchness. I was just having some fun there. $100 for a 25K account. It's nothing. And that's what we're sitting with. It's not doing that great even. I mean, it's actually in arrears. But I'm not too worried about it at all. More worried about the cash accounts. But I just say, just be wary of the instant funding thing. Okay, just watch out for that. I mean, a 3% drawdown. You might as well open your own cash account, guys. Really, with 10 grand, you can trade 100 grand. It's no big deal, and then you can trade as much as you want, and obviously, as well, if you take a small loss, you can correct it and get it back. I don't know, guys. It's up to you. You know, the funded accounts, there's a lot of promotion goes into that, and yeah, I left a link for you there if you want the funded account. But like I say, I do, in all honesty, prefer a cash account. Where do I think the Euro Japanese yen is going? You see, now this is painful for me to do this one because I've got the US dollar Japanese yen, and it's not going well at all. It's going against me. Probably going to lose here because I'm looking at the Euro Japanese yen, and in all honesty, if I look at the picture, it's long. You know, if I look at the picture and I'm sitting short on the US dollar Japanese yen, I'm concerned about that. Yeah. But okay, that's life. But okay, here's the thing to watch out for. Possible double top developing. That could happen. Could quite easily happen. But there's your thing, broke through. Might have to redraw this. But there's an area here where there's some money, perhaps. Yeah, still long. I'm looking at this as a long trade. It's going long at the moment. Nothing much you can do about it. Worst case scenario, it comes back to take some money down here again at the 158, 157 level. So yeah, you can go long on that. And I might have to stop loss out of the US dollar Japanese yen because this is, in all honesty, not going well. It's going against me. It's going against me there, and it's going against me here as well. US dollar Japanese yen, $100 down. And I'm not feeling it at all. I did put my stop loss up there though. So yeah, I'll leave it for a while. Just see how that goes. But yeah, it looks long. It does look like it wants to go long. Let's see what it does with this resistance. Let's see what it does with this double top first. If it breaks through that, if it goes above that, I might actually get out and get out of the trade. It's one of those things. It's what you call a losing trade. Okay. Can't win them all, eh? Can't win them all. So yeah, that's where I think it's going. Going up at the moment. I don't think it's going to go up forever though. I really don't. I think it's kind of, you know, it's much of a muchness because it has come down quite a lot. But my concern is that it goes all the way back up to there. That's why I've got the stop loss in there, you know. You don't want to play around with fire because it could go all the way back up to there, and then you got trouble. If it goes above that high over there, I'll liquidate. I'll move away. It's a bad trade. Nothing more in the news, eh? The news is pretty basic. Suspect charged with murder of United Healthcare CEO. I believe this guy was a rich kid as well. Can you believe it? So yeah. Okay, analysis. China ready to go deeper into debt to counter Trump's tariffs. Yeah. Starbucks appoints first China chief growth officer. Okay. Xiaomi reveals Tesla-like SUV aimed at China buyers. Ooh, the Chinese car market's really taking over, eh? All over. And the Oaks are buying it because it's cheap. You know, but the way I look at this as well is, at the end of the day, they must be cutting corners somewhere. It can't just be cheap labor, guys. They must be cutting corners somewhere. And from what I've seen of these cars, you know, like if you go and buy like one of the more expensive vehicles, like a Land Rover or something like that, it'll have air suspension and you'll drive it and it'll be smooth. It'll go around corners and have all these extras. Whereas this Okie has got the old standard McPherson strut from the old days, and you know, the old standard suspension, all the rest of it, and it's a bumpy ride, and you hit a dirt road, and it's like, oh. So, you know, they must be cutting corners somewhere, and I think it's there. I don't think it's a bad car or anything like that. I think it's just they're putting a bit of cheaper technology into it, that's all. So I'd be very careful of that scenario. Right, so but that's interesting if you think about it. You know, they've been copying these cars for quite a while, and I just think that they've got to be cutting corners somewhere. Gong gong. Yeah, but it's selling, Lawrence. It's selling big time, especially here in South Africa. Have you noticed? It's really, really selling, eh? The Oaks are buying it left, right, and center. And there's more models coming up all the time. You know, when I was a kid, I loved cars. I've always loved cars, okay? And I used to go around and I used to name every single car. I could name every car by its year model, by its badge, by everything. And now I don't even know what's on the road anymore. I've just lost control. I don't even know what's what. Completely lost it. And it's all these Chinese cars and whatnot that are out there, which is quite confusing, to be honest with you. And they're cheap. The Uggs like cheap, eh? The Uggs buy cheap. It's unbelievable because it looks beautiful. It looks, you look from the outside, you think, well, it's a smashing looking car. And then when you look closer, it's probably, they must be cutting corners. There's no other explanation for it. How can it be half the price of the other cars? It's crazy. Now I see that Nissan is going bankrupt, man. I reckon they got 12 or 13 months left. Nissan. Wow. Imagine that. I know they joined with Renault. I wonder if Renault is also going to go bankrupt. I didn't look at that. But they say now they got 12, 13 months left and they're done, eh? That's really bad. That's ever since that situation or whatever, he got arrested, the CEO, and things went down. Oh, that company, they're not selling units or whatever, but that's what comes of it. It's basically a Japanese car. The Uggs are charging German car prices for it. You know, like when I say that, I'm talking like big expensive Mercedes Benzes and BMs and things like that. And you know the Japanese car's price point is quite high. So natural human being reaction is to like, why must I pay that much money for that? You know, and then they go and buy a Chinese car. It's crazy. Daniel, less import duty due to BRICS. Less import duty due to BRICS. That's a good point, actually, Daniel. Yeah, I suppose the BRICS get a better deal, eh? Yeah, makes it a lot cheaper. Does make it a lot cheaper. Photon Bucky actually looks nice, but I suspect I rattle 2 months into driving the grave. Yeah, no, I don't know. Some guys that have bought them that I know are pretty happy. I know a couple of guys that bought Havals that are quite happy with them. They're not too bad. Some people say they're a load of, I don't know. You know, you read the reviews and whatnot, you never know what you're getting, but you speak to some people that have actually owned them. They don't seem too unhappy. I did drive in the back of a Haval the other day in a nice vehicle, you know, nice leather seats and all the digital stuff and whatnot. Really a fancy car. I went over a couple of bumps and I thought, ooh, that's a bit rough. But, you know, it's cheap in comparison to all the other cars. So that's what you're going to get. So, yeah, no, when you talk about investing, you know, do you go with that? Do you invest in that? And do you invest in the car companies? Like, where's Tesla going? You know, what's going to happen with that? Interesting. The way I see the future of cars, in my opinion, is you're not going to have a car in the future. I think you're just going to have a card. And then just like those bicycles in Europe, they're going to park the cars in a specific place. And if you want to go to town, you're just going to go and get in a car with that card that you own, and it will take you to wherever you want to go without even a driver, most likely, just electronically. AI. Wendy, I went short yesterday and it's against me right now. While the trend is short at the moment, I'm wondering for how long. Alma losing trade on the euro Japanese yen. So, Wendy, you're in the same position I am. Probably my fault. Yeah, you know, that's the thing. I agree. But what I'm looking at on my trade, like I said to you now, is if it like goes above these highs, I'm going to relook the trade because then I'm getting a bit worried about it. And I think on the euro Japanese yen, I would say the same to you. If it goes above these highs, just have a relook at the trade because then it's starting to push away. And we might be in a bit of trouble then. I don't know where your stop loss is, but, you know, if I look at this, I'm not comfortable holding it above there because then it's starting to push out. So just watch that those highs, if it goes above those highs there, then start really looking at the trade and just see if it's broken the structure and if it's going out. For the time being, you know, you can still, because what I'm seeing here, although this is only one bar, I am seeing a level here where there's some money lying here. So there is a bit of money lying around here that it might take. And I'm thinking that it might go down. And to justify that, I'll look at the Great British Pound, Japanese yen, similar story, same thing. Also, you know, I'm looking at this and thinking, yeah, a bit of a double top developing here as well. US dollar, Japanese yen, which I'm in, you know, I'm looking at this and thinking, worst case scenario is it goes all the way back to take the money up here, which is quite far away, unfortunately. But I think if it goes above those highs, I'm done. I'm closing it out. But then I'm also sitting with this damn Nikkei as well, which is also a problem. I'm hoping it doesn't go all the way up here to try and take some dosh and go down. But this one I'm not going to get out of. This one I'm going to hold because I do believe it's going to continue on short or at least stay in this range. Because look at this. This is a long-term range. That's in that range. I'm not seeing it get out of that range. So let's hold on to that one and see what happens. Not too concerned about that. Then we've got the US 500. It might actually come down a bit lower and get some money a bit lower, which would be good. We don't have to get in here. That's great. Oh, cheers, Daniel. Bye-bye. Yeah, good. Cool. Okay, Lawrence. Euro Japanese yen is currently trending above the 2850 MA, which is acting as a support. Do you ever flip a trade, Rob? You know, Kokoro, that's actually called, that's what's called swing trading. You know, everybody calls this swing trading. I don't. I actually call it position trading, but you know I don't play a lot into names. It's meaningless to me. It's not that important, and it's not terminology that you have to really know, but just pointing out that, you know, people call this swing trading, but what swing trading actually is, because what we do is position trading. We position ourselves in a trade, we wait for the trade to play out, and it wins, and then we look for another trade. That's actually called position trading. And what everybody's calling swing trading, and I mean everybody, whenever I see someone say swing trading, I know they're referring to position trading. But actual swing trading, and this is what I learned many, many years ago, is a trader, and we used to have traders that did this exactly to the T. That's all they did. They would pick a product like the US 500, and they would trade it to that point, and then they would get out of the long, make it short, and then go short, and get out of the short, make it long, and then go long. And flip it all the time, swing, back and forward, back and forward. And that's what we actually used to call a swing trader. Used to stay in the same trade and just swing the trade up and down. Short and long, short and long, short and long. That was real swing trading. What these guys refer to swing trading now is what we call position trading. It's just basically, they call it that because you can trade short and long, I think. That's all the reasoning is behind it, but none of them actually know what a real swing trader is. And a real swing trader, you would probably call a flip trader, Kokoro. But that's effectively, in the old days, that was our swing trader. A swing trader would like literally stay in the same trade permanently, going long, going short, going long, going short. That's a very difficult way to trade. So by the way, what we're actually doing is positioning ourselves in a trade. We call it position trading. You position in the trade, and then you wait for that trade to play out, wait for that position to play out. For example, this is a position trade. We took a position, whether it goes against us or goes for it. The position is, we're in the position with a profit taken there and a stop loss there. We're positioned. That's why it's called position trading. Swing trading is the wrong name for it, but everybody calls it that. And then the reason they call the other one day trading is because you get in and out of the trade on the same day. That's why it's called day trading. So it doesn't matter whether it's on 5-minute charts, 1-minute charts, 15-minute charts, 4-hour charts, 1 million day charts. If you're getting in and out of the trade on the same day, it's a day trade. And some of the actual funded trader accounts won't allow you to do anything else but day trade. You must get in the morning, get out in the afternoon, that sort of thing. That's day trading. Okay, so doesn't matter what time frame you're on, not important. All that matters is you're in and out on the same day. Morning, Eugene. 1:30 a.m. So it really is good morning then. Wow, 1:30. It's 10:30 here. Wow, that's pretty early, dude. Pretty well. Pretty. Is it late or early? Because yeah, you probably haven't gone to bed yet. Just saying, like, 1:30 could be early, it could be late. I mean, it really doesn't matter, does it? Yeah, either way. Either way, now. So as I was saying, no liquidity sweep video because I don't play into that. Okay, that's not my thing. I'm not doing these strange things. I don't do those things. That's not my thing. The crypto videos, seriously done with that. They've never been of any interest to anyone except one or two people. They're not that important. And yeah, so that's where we're going with that. So fundamentals, yeah. Okay. So we were talking about the cars, yeah. These cars, I tell you what, these Chinese cars. Yeah, Daniel said that they actually might be due to we get a better rate on the tax imports, which is kind of strange actually. So it's actually kind of unfair to the European companies and American companies that send us cars and that sort of stuff, and Japanese companies. Just because the Chinese are part of the BRICS, then we get a better deal on it. But yeah, those cars are pretty cheap, I must say. They are pretty cheap. I still think they're cutting corners somewhere to make them that cheap because it's not just the taxes. I mean, gee whiz, those things are less than half the price of a car in a similar vein. So, yeah. I see this is turning around again, going back down. Which means these will also be turning around. I see the sellers are coming back into the market. So Wendy, I think, like I said, it might be developing a bit of a top here. So I would only worry if it gets above those. But at the moment, it seems to be turning down. So maybe we get lucky and it comes back down again and does that correction thing, which comes back to take this money here, which will give you an opportunity to, let's say, escape and go, phew, got out of that one. Okay, all right. Because that's what we do as traders. If we can escape a bad trade, then that's better than actually winning a trade sometimes. You have to believe that, eh? Okay, US 500 looks like it wants to go a bit further, which is not bad news for me. Even though I was calling this long here, we didn't get the green bar. We're getting a big red bar here now. Well, a small red bar. There was a tiny little green bar. I wouldn't trade that. Now there's a tiny little red bar. Bit of indecision, but if it comes through here, because there's not a lot of money here, if it comes through here, might take the better money down here, or even better here at the 6,000 level. There's some nice, decent money lying around here. So I reckon we might actually get down to 6,000, which would be great. That would be great, because we can grab the money there, and then perhaps we can grab a bit of the Santa rally off that, which is not the worst situation to be in, to be quite honest with you. That would be quite good. Talking about investments, my NVIDIA investment is 2.55% down today, but not to worry, I'm still in a huge profit there, so not going to complain. And I added more at actually 134 instead of 138 than 39. That's okay. Right, but investments, guys, that's a big thing with investments. Do yourself a big favor. Don't even look at it every day. What I normally do is I must actually add some money there today or tomorrow. I'll actually put some money in that account. That reminds me. But anyway, no, don't look at it. Look at it once or twice a month and just see where it is. And forget about it. Just leave it there. It'll surprise you. Because if you keep on looking at it, you're going to be tempted to do something like sell something or whatever. And the thing with the rule with investments, my number one rule with investments is set and forget. In other words, buy it and then never sell it. And the only time I sell is when I see something going wrong with a company. If I see some really bad news. And like I said to you, if you've got 10 shares and one of them starts going wrong, it's only 10%. You don't want to lose the whole share though. Just, if you've lost a couple of percent on that share and it's only 10% of the entire portfolio, the whole share, you've lost a fraction of an amount on your portfolio, or it's reduced a little bit, and you can actually sell that and replace that with another good company, carry on from there. But that very seldom happens. Very, very seldom. And when it does, you can literally see it coming. But for example, in South Africa, I'll give you a good example of that at the moment. I'm not going to talk about the past, I'm talking about the present. And I didn't own them, but if I had, I would have rethought my investment. So at the moment in South Africa, we've got a retailer called Pick n Pay, and we've got other retailers, Spar, Checkers, Woolworths, that sort of thing. Now, I personally, I'm invested in Spar and Checkers, and for me, those are the best at the moment. But what I see with Checkers is they've already grown. What I see with Spar, for example, is future growth. They look, and the reason I see that is because I live here. I go to the shops, I see the improvements, I see what they're doing, and that sort of, I don't even look at the charts. I'm like inspired by them, and I think, oh, that looks like a good place to invest my money. So you put your money there. But there's a company called Pick n Pay that's just gone south. It's just gone bad. It's just gone wrong. Okay. But oddly enough, I could actually see it when I was going to the shops as well. Bad service at the tills, getting this look like, oh, what are you doing here, sort of thing. The shelves weren't competing, that sort of thing. Now they've changed the CEO, and they're desperately trying to get it back, and they're desperately trying to improve the shops and be competitive and put some specials out and whatnot. So for me, if I was invested in that, I would have actually, that's the one that I would have said, do you know what? Sell it all up and put it into either Spar or Checkers or Woolworths or something else, based on the fact that retailer, for me, I would have said, well, this is going nowhere. And that would have been a couple of years ago already. I would have said, this is going nowhere. This is dying. And I would have taken that and moved it out and put it somewhere else. So that's just an example of looking at your overall portfolio. As an investor, you're looking at something completely different. You're not looking at charts. You're looking at what you see around you and what's happening. Now, it's a bit more difficult for my investments in the USA, for example, or the UK, because I'm not there. I'm not in the shop, so I can't really see what they're doing. So I have to rely on very much what's happening in the news with things like that, like what's happening with Coca-Cola, what's happening with Nvidia, what's happening with Tesla, whatever, the Amazon, I'm invested in that as well. There's a couple. I'm invested in quite a few. And I have to rely on what information I get out there in the open world, in the news and whatnot, rather than being able to actually walk into the physical stores and see for myself. But that's how I invest. I look at what's going on. I look at what's going on around me in those companies, and I decide for myself whether I feel there's a future in that company and it's worthwhile putting money into it. So yeah, when it comes to that is the simple basis of investing. It's completely different to trading. Don't think that it's the same. It's not the same. It's, what you're doing because it's the same concept of buy and sell and all that sort of thing. But you don't trade when you invest. When you invest, you buy, you set and forget, and you add to it as much as you possibly can. Morning, Rob. I also trade the swing points. Well, then you are a swing trader. And it's good to actually meet another swing trader at last. I haven't seen guys like you for years that trade the swing points. Many people don't. I did it for a while. Many years ago, I used to trade. I would trade swing, and but it is work. You have to sit and watch it and get the points and get the swing points right and that sort of thing. And you don't always get it right. How's it, Kevin? Morning. Just joined 8:37 a.m. here. A man after my own heart. Or someone who starts late. I'm not that much of an early person. Yeah, no. Totally. That's 8:37. Yeah, here it's already 20 to 11. So You guys are on the 2-hour behind us shift at the moment. I know that because when I watch the football, it's pretty late at night here, and well, during the week at least. And then on the Saturday afternoon, it's pretty late in the afternoon as well. So yeah, I get that. I do get that. Okay. Where are we going? Let's just have a look at is the Nikkei starting to play back into our favor again? Are we getting a red candle? Is these two trades? I know that Wendy's in the Euro Japanese yen. So let's hope that they play out and go the right way. Because that's always, sometimes you get these things wrong, man. Then you have to live with it. I see the DAX has gone back up, eh? Starting to hook up here. It didn't even get down to this level and take this money. That's turned a bit early. I expected it would get a little bit further down. There's not a lot of money here, but there is some money lying in this area just here. I thought it would get down to there at least. It's turning rather early and going straight back up. DAX is looking strong, eh? Looking very strong at the moment. I'm not sure why. I don't know what's so strong about Germany. I mean, even VW was complaining the other day that things are bad. So heaven alone knows why that's going up. I guess we'll figure that out in the future. Can't assume anything. As I said, assumption is the mother of all evil. And of course, the one big saying that we always have, the market will always lull you into a false sense of security. Just when you think things are going your way, market's waiting for you around the corner with this little hoodie on, with this little club, mugs you as you come around the corner. Boom. Like I said to you, even after years and years and years and years of trading, you'll get it wrong. We always do. It's simple. It's because it's 50-50, man. That ain't going to change. It's always going to be a 50-50 trade. Can't change that. Where are we with Bitcoin now? I still think Bitcoin's going to actually go short from here. I think it's going to come down a little bit further. I think tonight, I don't know. I think it's probably going to come back down to the 90,000 here. Probably try and test this low. If it goes below that low, there's a good chance of it going all the way down. I know it's got its 100,000. Everyone's happy about that, and I think it's done. I think it buyers and sellers. Because remember, the Bitcoin market is very much buyers and sellers. It's got nothing to do with any asset value. So difficult to call. We haven't spoken about gold, eh? Yep. Look, I still believe gold is short. My feeling is that there's lower highs here coming down, and it's in a triangle, which I feel will resolve to the downside. But it's neither here nor there. But this is all the way down. A little bit of a backup, all the way down, ranging in the triangle, hitting the trend resistance. If it breaks through here, goes up, it's long. Breaks through here, goes down, it's short. I just feel like it's going to go down. No trade here at the moment. It's inside the triangle. Let's wait for it to break out either way and see which way it goes. We can't preempt anything. We can't assume anything. But that's just my gut feel, as it looks like it wants to go down. Normally these will resolve to the downside, but they have been known to resolve to the upside, so we have to wait and see what's going to happen. Rob, I recently learned about the moon face indicator. It seems to coincide with trends. Any thoughts? Wendy, you learned about the moon face indicator. It seems to coincide with trends. Any thoughts? Wendy, run. Run, 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 run like the hills. Run away. No. Run. Do not get involved with that sort of thing. It's not going to work, okay? It is not going to work. It's not factual. I don't know what it's based on, to be quite honest with you. But no. do not use the moon phase indicator. And to be honest with you, there is so many indicators. Just look at this. Just look at this, Wendy. Look at this. This is indicators, 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 indicators. I wonder if the moon phase indicator, yeah, moon phases. Here we go. This is just one of the indicators, moon phases. Oh man, gosh, look at this. Look at all these indicators. Now, what I always tell you guys, stay away. Don't use them. Do not use the indicators. They're going to confuse you. And if you see one called moon phase indicator, run for the hills. Look, all the systems work at the end of the day. I'm sure somebody's back-tested that system and they're perfectly happy with it. But no, I don't get involved in indicators. They're not my thing, eh? Not my thing. I will show you guys how to use the Fibonacci. I'll make a video on that. I do have a video on that, but I'll make another one, a newer one, a better one. I'll make a better one, and I'll show you how to trade fibs. Another system that you can use that I'm happy with you guys using would be the moving average crossover. If you guys want a video on that, let me know. I can show you how to trade the MACD, moving average convergence divergence. That's another good one. If you want that, I can show you. I could even show you how to trade the Ichimoku, but don't trade that. Don't trade that. It's easy, but it doesn't work. I think the only one I would use is MACD and moving average crossovers. They're lagging indicators, but they would work. Stochastic, I can show you how to trade with stochastic. That's a goodie. It's not too bad. What else can you trade with that's worthwhile? There's a few out there. The only one I would really play into, and I'll make a video for you guys, the only one I would really play into would be Fibonacci. I like that one. That's the only one that I'm comfortable with, to be honest with you, that I could say, that'll work. That'll be worth something, you know. But the others, most certainly not. Sorry, Wendy, but it's not for me. Moon phase indicator. You'll notice in my videos I always joke about when you trade, and I say, you know, before you take a trade, wait for the stars to align in the left, wait for the stars to align on the left, wait for the moon to turn into green cheese. That's what I'm talking about. It's overcomplicating it. You might as well be trading with ICT concepts or something like that. It's too much. Don't go there. Just don't look for new systems, okay? I want to put this to you in the nicest, easiest way. And that is, don't keep looking to change your system. Keep the system simple. Because if you go on a course and you pay thousands of dollars for your course and you become good at it and you know how to trade, it's not to say you don't know how to trade. This is easy. This is the basics. This is easy. Trading with any indicator is easy. You'll come away from the course fully successful, fully knowing what you're doing, fully understanding the markets. The difference comes in is when you put real money in the markets and then suddenly everything goes pear-shaped. And as I always tell you guys, it's not the lines that make the difference. This is not what makes you money. What makes you the money, or the factor, the difference in why only 20% of traders make money in position trading, and only 1% in 5-minute trading, day trading, is the factor is the human being, is you, the person. Now you'll say to me, but AI also doesn't get it right. Well, here's the thing, guys, with AI. With artificial intelligence, with a robot trading for you, firstly, the systems are only, let's say the system here is a 7 out of 10 system, right? So it wins 7 out of 10 trades, right? Supposed to. But the system is so fine-tuned that it can't see the things that you need to see subjectively in the market. Sometimes there's a lot of subjectivity. You've got to look at something that's bubbling over in the market, something that might be happening and that's going to cause a crash or cause a difference, or some Fed chairman is talking or whatever the case. AI can't see that. It only trades what it sees. So it makes mistakes as well. So human beings make those mistakes. Human beings trade in and out of trades based on emotion. And the emotion is what makes the difference. So two traders trading exactly the same system on the market, one will win, one will lose, simply because they're trading on different emotion and a different way of thinking and approaching the market. So don't change your system every 5 minutes. Every time you see a nicer indicator, whatever the case, you can try them out and have a bit of fun with them, but don't play into it, because you're going to find yourself changing systems over and over again. Now listen to me, because I've done this for 30 years. You're going to find yourself changing systems over and over again, and they're all going to turn out with the same result. Okay? Because what you have to change is you. What you have to change is how you approach your market and your trading. That's what's going to make the difference. Okay, so we're not going to go into that. Lol, I've been to bed, just woke up. It seems to me it's hard to go against the US dollar, Japanese yen. It's working okay for me now, long. Okay, so yeah, I took the short, as I said. Didn't work out for me. Yes, I'm going to look at the S&P 500 for you. Yes, Bobby. Kevin Simpson, I'm long on silver, but not very confident on it. Yeah, it'll be the same as gold, and I'm thinking short, Kevin. I'll go to the silver in a moment. Yes. Okay, US 500. You'll notice I did call this long this morning, and I said there's some money lying here, but a very small amount of liquidity lying here in this area. So what I'm seeing is a tiny little demand area at the 60-50 level. If this was a nice strong green bar, I might buy it. But it's a tiny little green bar there, a tiny little green bar, and then a red bar. So I'm not happy to buy it just yet. So what I'm hoping for on the US 500, S&P 500, yes, whatever the case, is for this to actually break through this level, because there's not enough money for it here, and maybe come down to a stronger level down here at the 6,000 and give us a better entry over here. I'm really hoping for that, because that'll be better. But if you get a strong green bar coming out of this level, then yeah, okay, we can go long again, because I'd really like it to come down a bit further, give us a bit more room, a bit more leverage, because then we've got a nice Santa rally coming in. But at the moment, these little bars here are just far too small and weak for me to say I will go long or short. It's at the moment it's a long trade, because it's sitting on this level, it's sitting in this area of money, but I just got a feeling there's not enough money here, and it might actually break it through a bit and give us a bit of a stronger one down here, the resistance, the support. So let's just see. That's my feeling on the US 500, S&P 500, and the ES will probably be the same. And then we talked about silver. It's the same as gold, basically. I'm looking at it probably going to come off this level here, lower highs, and probably resolve to the downside out of this triangle pattern. So I'm thinking, this came all the way down here, went back up, it's come all the way down again, ranged, sort of coming up in this triangle, it'll probably resolve back down. That said, we can't call it just yet. It's still within this area. It breaks to the upside with the green candle up, breaks to the downside with the red candle down. Lawrence, I use GT247 in South Africa. Okay, GT247 is the best. But they don't work with TradingView, by the way. You have to use MetaTrader 5. The reason I don't bring MetaTrader 5 up here, number one, my account number's on it, and number two, it's a bit more complicated than this. So, but yeah, they're the best. They don't give you any hassle. They're owned by Purple Capital, which is on the market, and yeah, pretty strong. Okay, good fees, good swaps, good everything. Just speak to them. Okay. Okay, guys, let's show appreciation for Rob. Match the likes, the number of years. Rob teaching as well. Yes, thank you, Wendy. That would be appreciated. um, uh, yeah, I'm enjoying growing the channel. It's actually a lot of fun. And I was surprised to see us go over the 8,000 subscriber mark, and now we're on 8,300 and something. So we're doing really, really well there. So our community is growing, and community of like-minded traders who understand that money doesn't fall out the sky. I never thought there would be that many, but I think there's going to be a lot more of us. I think we're going to grow to a decent level, and more people will know what the market's about. I like, yes, no, totally, Lawrence. I like TradingView for the analysis and for the teaching and that sort of thing. They've got a lot going for them. Look, I don't need all these indicators. I don't need all this fancy stuff here or anything like that. But their platform is so easy to use and so nice to teach with and show with and to analyze with and stuff like that. So I give that to them 100%. I must give it to them. They've got the idea. But when it comes to the broker you choose, you know, you got to take what they got to offer. Now, MetaTrader 5 is not the worst thing on earth. I mean, lots of people use it. It works nicely on the phone and that. But yeah, that's what you have to use if you trade with them. Okay, so you better get used to it. I know that I actually used to do a lot in South Africa, and I used to trade with them in South Africa. Now I have to trade with them in the UK. But when they traded in South Africa, and I tried to move big money over to them, and they were like against it because something to do with the money moving between the UK and South Africa. So they've become a bit of an issue. But yeah, they do trade in South Africa. They got a South African thing, but you can only trade like South African stuff. So not great. So for S&P 500, US 500, and all these instruments, GT is the best because I can trade all of these with GT. All of this stuff with GT. With GT, you can have a US account to trade these things as well. So, you know, it's great. And you can actually have an overseas account with them. I think Lawrence, I think the minimums are like, I'm not sure if it's 50,000 Rand or $50,000, but you can check with them. I think it's 50,000 Rand, something like that. For the trading account, that is. Not for equities, you can have any amount of money, but for trading, I think it's 50,000 Rand minimum for a US account, that is. But you can trade these with a local account, by the way, these indexes and stuff, and gold and silver and Brent and all the Forex and that sort of stuff. You can trade with a local account. Lawrence, they own Easy Equities. So let me try and explain it. I've been with them for like 25 years or something, maybe longer. They are owned by a company called Purple Capital, which is in the UK. They are listed in South African Stock Exchange. Then they have the trading company, which is GT247, which does the trading side, only trading. And then they also own Easy Equities, but they're not linked. So you can't have like an Easy Equities account and trade. You can't have a trading account and and trade on Easy Equities. You have to open two separate accounts, and you have to load money in separate accounts. Okay, they don't amalgamate. They sort of fall under a different leg, but they're owned by the same holding company, if that makes sense. Okay. How do you know which broker is in which country? The only way to know that is to know the brokers in your country, to figure out if they're in your country and to ask them. Okay. IG also provides sense accounts. Loris, I see. Yeah. Okay. So I just like using them because I've used them forever. And, you know, when you've used somebody forever, you're just reluctant to change. There's a company called AvaTrade, but sure, you know, you get quite a shock when you go into the indexes with them because their gearing is so high. And yeah, their contracts are much bigger, but that as well. And then yeah, there's quite a number of companies available, but I prefer to trade with GT because I've been around with them for longer than 25 years, I think. They've always been around. They've just always been there, part of the furniture. They don't, you don't get much from them, but I don't need much. You know, I don't need fancy stuff and whatnot. And you can always do your research on another platform or whatever the case. So there's not, I don't need a hell of a lot. And in the old days, I mean, we didn't even get MetaTrader and all that. They just used to have an online charting thing and a little platform that we used to trade on. Can't even remember what it looked like, to be honest with you. Quite weird. But it was quite handy and quite useful, and it did the job. Yeah, thanks, guys. Yeah, thanks, David. Thanks for the idea. Good thumbs up. And yeah, I would like to see it grow and whatnot. See the channel grow and get more like-minded people here. And it's quite a challenge for me to grow this channel now that I'm into it. So I'm challenging myself to make it nice and big. Have some fun. We'll see what happens next year. How it grows. It's gonna be fun. Trade of the day, for those of you who didn't get it, these are the trades of the day. I think I did put them out. You can go back and have a look. All the buys and sells. Trade of the day is the longs, the shorts. These are just my ideas and what I feel the way the markets are going to go. I have a look at it earlier in the day and then I just go through it, and that's about as good as it gets. And then I look for those trades as I go. Luigi Mangione graduated from the University of Pennsylvania as a member of a prominent Maryland family. Yeah, killed the CEO of a drug company. Yeah. The world as we know it. The world seemed to be a much more innocent place back in the old days than what it is now. But I think it's just because we didn't know about all the things that were going down back then. I think things have just kind of changed a lot over time. That's all. It's got nothing to do with what the world looked like or anything like that. Look how this has come back down again. So it looks like that is going to be okay. Not sure about this though, because that is still, that's a big green candle up there. How's your euro? Oh, yeah, it has come down a bit, eh? Yeah, so you got that spike there. Okay. And the US 500 does appear to be going into this area. I'm just wondering if it's going to take the money and go up or if it's going to come down a little bit further. I really hope it comes down a bit further and gives us a bit more room, because then there's much less risk. Because if it comes down here, you get the purchase in here, we've got all that space up to there plus a little bit extra. That'll be great. That'll be absolutely great. Because if it runs from here, it's like, yeah, I just don't know where it's going to go. One more question. Are they only geared towards CFDs or futures as well? They're mainly geared toward contracts, CFDs. Futures as well, but mainly geared towards contracts, CFDs. And obviously they do indexes, Forex, shares. You can buy shares, trade shares, I mean, on gear trading as well. Commodities and obviously the Forex, yeah. They got everything effectively. There's one or two instruments that they won't have. I've noticed once or twice. I just get them elsewhere. You can't trade the VIX there. Okay, you can only trade that with IG. But yeah, they got most of the other stuff and whatnot. So you can, and then you just got to choose whether you want what type of account you want and all the rest of it, and go from there. Why am I promoting them? Yeah, no, I'm happy with them, so you can go with it. Go for it. Go for it. Go mad. I'm almost becoming, I'm like a marketing man for these guys, and they still charge me, so, you know. But yeah, my account's with them, and I'm quite happy. So the information's for you at the end of the day. Yeah, being in South Africa, we're a bit more limited than if we were in the USA and that sort of thing. So, you know, for us to get these companies and to get companies that can trade overseas and that is not as easy, but there are some guys that are going out of their way to make it happen, and that's always great. And, I love them for what they've done with easy equities and all that fantastic stuff. Absolutely fantastic. At one stage, I was trading directly on the JSE, my own JSE account, but that's so. I'll tell you what, guys, it's like there's no instant trading with that, eh? And you sell it, and they're like, "Well, we'll give you whatever price we can get." You wait and see what happens. You can't just click it off and say, "Oh, I'm selling that. I'm going to get that amount of money for my share." They're like, you contact them and you say, "Sell this for me, or buy this for me," and they're like, "Yeah, I'll check what price we can get for you." And then the next day, you might get an invoice. That's trading directly on the JSE. Okay. Yeah, thanks, Lawrence. Yeah, nah, I just know they're not going to rip you off, and they're good lads. They're a bunch of good lads. You'll be okay. Okay, yeah, that's decent. That's definitely decent. And so, yeah, we talked a lot about investments. I think on Thursday, yeah, we should talk about the different types of trading. There's a lot of different types of trading. You mentioned the contracts and the futures and that sort of thing, but they're all the same at the end of the day. It's like the other day when the guy asked me to give you a thing on spot crypto, and at the end of the day, you've got to approach all kinds of trading exactly the same way. You shouldn't be approaching your trading in a different way just because that one's crypto or that one's currency or that one's gold, or it's all the same at the end of the day. It's all about buyers and sellers in the market, bunch of traders that want to buy and sell, and the squiggly lines look the same. So at the end of the day, you just want to buy and sell in the market. The only thing that's different would be the fundamentals. The fundamentals would be different. Okay, fundamentals are slightly different on crypto than they are on an index, or that they are on actual gold or anything like that. So you'll get different fundamentals, but the actual trading, the actual technical side is the same. And the way you approach your trading and the way you put your business plan together for the trading should effectively be the same. You don't want to make it different. You don't want a different scenario for your trading. You want to try and keep it as simple as possible, and you want to try and keep it with the same approach, because the only factor, like I've said, the only factor that makes the difference is the trader. Because trading's risky, and we have a natural fear. And the minute we put real money into the market, it's actually amazing what comes over a human being when they put real money on the line. And it doesn't matter how much it is, eh? It doesn't matter if it's a lot or a little. It's still your money, your hard-earned money, and you just feel like it's overwhelming, and especially if you start losing it and it starts going against you and doesn't start working out, and you start clambering to try and get it back, and so on and so on. It can be quite daunting. So understand, no matter what course you do, or how well you do on the course, or what demos you've completed, or how well you know the terminology of the market, if you haven't traded with real money, then that experience is still coming. And it's a very difficult experience to overcome. That changes everything. It absolutely changes everything. And like I always say, if it's too painful, if the loss is too painful, you're trading too much. Start with less. Just get into the market. Don't listen to these guys that tell you, just throw it all in there, just go mad, just trade thousands of dollars and turn it into $1 million. You're going to take your $1,000, you're going to put it in the market, and you're going to lose it all. And you're going to think, why did I do that? So, yeah, watch yourself. Watch yourself. Be very, very careful. Yeah, the volume, Lawrence, you say low volume. Yeah, the volume is going to, just beware, the volume is going to decrease now. The markets are going to move in December without volume. My thing with this, the reason I'm hoping for it to get a little bit further down here is because, like I said earlier, the institutions will be selling their stock out to go on holiday, and so what? And then the retail traders will start buying on low volume. So a lot of this buying will be on low volume. And somebody asked me earlier, I think it was Daniel, about January and the changeover in government overseas and whatnot. It's not my concern. Generally, it normally will correct slightly because the volume was so low in December. And then January comes along, and guess what? All those institutions come back and they buy all that stock back. Goes up, and then it comes down again. And so, yeah, it's much of a muchness. So the volume will go down in December. It's most likely. True, I'm a bad loser. I will even choke on a 0.01 lot. Yeah. It's really difficult trading, and that's why I say trading is for some of us, okay? So some of us can get used to it, and some of us will get around it, and some of us will trade because, at the end of the day, you're trading because you want to live your best life or because you really enjoy it. Just remember, trading is addictive. And believe me, we're all addicted to it. It's like riding a motorbike. You don't get away from it. But yeah, if you keep on choking on a very low lot, if you keep on struggling with small amounts, then you do need to reconsider where you are. You have to worry about that because you have to overcome that if you're going to be a trader. You've got to learn to overcome that. There are levels. Everybody's got limits. I mean, you've got to have limits. You can't just go willy-nilly. It doesn't matter who you are. There's limits to how much you're prepared to risk. In any part of human life, there's limits to how much you're prepared to risk. And you've got to know what those limits are. But if those limits are zero risk, then you might be in the wrong place, you see. You got to watch out for that. You can't have a zero risk limit if you're trading. You've got to have some risk limit. Because you've got to be able to sleep at night. And you've got to be able to enjoy the journey. So there's got to be a factor there. Now, the best way to get around that factor is with my strategy and my business plan, where you understand that you're going to win 5, lose 5, where you understand that if you take that loss, reset your mind to understand that, okay, I'm taking that loss, but I know I'm going to win 5 and I'm going to win more than those 5, and I'm going to make money over the period of the 10 trades. And if you understand that, then you start understanding the picture. So then even if you do have a bad run and you lose 10 trades in a row, which shouldn't happen, but if you do, you've got another 10 trades chance to make that back, and it will work itself out at the end of the day. That's the best way to look at it, because especially if you've got a low risk tolerance, then you really do have to think about, okay, so I'm going to do this with this business plan, understanding that I'm going to take some losses and switch myself off from that, expect those losses and expect those wins. Because the worst thing about the market is, although you understand that, you obviously don't want your first trade to be a loss, and your second trade to be a loss, and your third trade to be a loss. But guess what's going to happen to you? You can guess. Your first trade's going to be a loss. Your second trade's going to be a loss. And that's when the pain sets in. That's when you start going, oh, damn, this is not working, man. This is just taking all my money, and your balance is less than what it should be. And that's, where the risk tolerance is a problem. You start feeling that risk tolerance. So yeah, just try to work it out in your head that yes, there is going to be risk. Yes, there is going to be some losing. And yes, there is going to be some winning, because that's the nature of the markets. And then you'll you kind of, if you figure it out almost like a robot, like a business plan, and you've got your business plan down, I'm going to lose that much in every trade, I'm going to win that much in every trade, then you'll be okay. I mean, even if you don't follow my rules to the T, for example, rules won't make you money. Even if you say, I'll take my risk factor into account and my profits, when I reach my profit target, I'm going to take my profit. I'm not going to do what Rob says and move the stop loss up and hang it out behind the profit and whatnot. I'm just going to take my profit when it reaches my target. Even if you do that, you'll be better off at the end of the day because you're still going to make those profits. And if it goes above that, whatever it goes above that wasn't my money anyway. You know, that you can work like that. That's fine. But at least go for the profit. At least go for the big target. Don't get out too early. Don't take small profits. Take big profits, because otherwise the system doesn't work. Hi, Rob. How are you? I would like to know, when you hit your trailing stop between two daily chart support resistance lines, do you wait until you bounce off those lines again before you open a trade? Or do you take the trades between them as well, i.e. off an upwards trend line or a support resistance area where you add it on the 4-hour? I would like to know, when you hit your trailing stop between two daily chart support resistance lines, do you wait until you bounce off those lines again before you, okay, I get it, okay. Or do you take trades between them as well, i.e. upwards trend line or a support resistance? Okay, let me try and, let's go to our losing trade here, right? And say, now this is where swing trading comes into it, right? Let's say it goes up here, it takes out the stop loss, right? So the stop loss gets whacked. And then you're saying, would I take another trade in between? Normally what I would do on a losing trade is probably walk away. Probably, because I'm firstly peeved. And, you know, I've got to get my emotions right. So I don't want to revenge trade it, number one. But what you could do, what sometimes is done, all right, is you take your stop, it's sitting on a trend resistance. I might swing the trade and go short because it's telling me to go short, because it says this is another short trade. And then it was a short trade. Or it might go above that and give me a long signal, and then I'll go long, but not immediately. Normally when I get stopped out of a particular instrument, I'll actually take a breath before I take my next trade and just have a look at the picture. Now, every single trade that I take is a new trade. So in other words, if all these lines are gone, if I get taken out at stop loss, I'm not just going to take the trade. I'll look at it like a new trade, like this. I'll look at it and say, is there a trade here? Is this a trade? I won't simply take a trade because it's there or revenge trade it or try and get back into the trade. I'll look at the trade and say, okay, is there another trade to take here? Is there another possibility that I want to take? And if there's no trade, I won't take the trade. I won't exactly wait for it to come to the support and resistance lines. I'll look for liquidity. I'll look for other areas where I can get into the trade. Normally, my invalidation will be pretty close to an area that would turn the trade or would put the trade into another level, and you could look for a trade in that particular area. But it's the same as if you get taken out on a take profit. Or for example, let's say this went into profit, and then I brought my stop loss down, brought my stop loss down, brought my stop loss down, and then it went back and took it out, let's say $1,000, and it's in the middle here. Would I take another trade there? No, only if there's another trade showing. If there's a trend line, if there's a supply or a demand or something like that, then I might do something. But if it's sitting in the middle here and I get taken back out on my stop and I've got my money and I walked away, I'll wait until I get a new trade, a completely new trade, and then I'll take it. I won't just take another trade, no. So I hope that, JD, I hope that sort of answers your question. I think I understood it like that. Effectively, I will wait for a new trade, whether I get taken out at stop, whether I get taken out at profit. I'll wait for a new trade. I'll look for a picture that says this is a completely new trade, which you can now get into and you can now take. So, yeah. if it's valid, yeah. So I will take the trades of the 4-hour resistance as well if it's valid, if it's a valid trade. Okay. So the trade has to be valid. It can't just be a revenge trade or just get back into the trade or anything like that. I won't add to a trade unless it's a good trade. It's got to be a valid trade, and then I'll get into it. And like I say, normally if I get taken out for stop, like I say, then I'll normally take a breath and walk away and come back. So I'm not angry with a trade, because that's important in psychology. Is you tend to like try and get the money back, and then that's the wrong thing to do. So I'll try and walk away and then come back and relook at the fresh picture, see what we've got. That's important, that no matter how long you've been trading or how often you've been doing it, the psychology behind it is important. You will always, doesn't matter if you take a loss in your first week of trading, if you take a loss after 30 years of trading, the same applies. And, when you come back to it and you look at it, you will be peeved in a way. I switch myself off from it completely reasonably these days. I go, okay. But you're still a bit peeved. You still want to revenge trade it. You still want to get it back. You don't want to lose, man. Nobody wants to lose. That's not what it's about. So, yeah, that's why I've learned over the years to say, okay, stop, wait, look. Take a step back, then look, and then see where you are. And then sometimes I'll even walk away from a certain instrument for a while and go trade something else. Just so that I don't get too tied up in it. Because the trouble, what actually happens is you start seeing a picture over and over and over again, and you start believing that picture. It's almost like when you get caught up in a lie and you see that picture all the time, that you can't get out of it because you keep seeing the same picture. You keep seeing the same thing over and over and over again, that you believe is right. Something, you assume something, and you believe that that's right. You believe that this is all fake news or something, and oh, look at this, and you're watching it and you're thinking this is true, and then you convince yourself over and over and over again that that's right. And you can't get out of it because you're sucked into that picture. And it's the same with trading. You're sort of sucked into, this is the picture I'm seeing, and I traded it long and I lost. And I'm going to trade it long again because I'm right. I'm damn sure I'm right. How can I be wrong? And then do it again and you lose again. Because you're wrong. But you believe you're right. Because you keep on assuming, your brain, your psychology gets caught up in it. So sometimes it's better just to walk away, come back later, have another look at the picture, see if it looks different to you. That's a very important point in psychology. Kevin says it just, even if it's just for a few minutes or just for a few hours, normally better for a few hours, even a day. It's a funny thing, guys. It's a really funny thing. You get caught up in it. For example, me now, I'm now short on the Nikkei because I'm convinced that it's short, right? Now, all it takes is for this to get stopped out now, and I continue to believe that it's short because it's in this range, and trade it short again, and then it goes long again. That's the point. You've got to understand that sometimes you can be wrong, but our psychology doesn't allow us to be wrong. Our psychology doesn't allow us to lose. It gets upset. It starts to get antsy. It starts to get irritated if you're getting it wrong, or if you're losing, face, or if there's all kinds of things that go in your head that you just really struggle to get around. And believe me, it's really difficult to switch off from that. To switch off from that is near impossible. I've learned to do it, but it is really, really, really difficult. And even though I can do it, I still to this day sometimes use words that shouldn't be used when things go wrong. So that's the nature of the game. And Malthus, am I late? You are so late. Because in all honesty, I am about to sort of close it down. I've been here for a couple of hours. You lost 3.3 to 5 trades yesterday, or 3.5 trades yesterday. Terrible day. You've obviously had a bad day. That happens. Having a bad week. The Nikkei's down. The US dollar, Japanese yen is down. You know, nothing goes according to plan, eh? But if you're trading on the shorter time frames, you're going to have more losses in a day. You're day trading and that sort of thing. So expect that, because it's a 50-50. You know, I prefer to go on the longer time frames, and maybe things will play out a little bit easier because I got more room to maneuver. So let's see, because I haven't lost anything yet. I'm just in a drawdown. So they might all still win. Those trades might all still win because they're lower time frames. But yeah, no, I feel for you there, dude. That's we've all been there. Those days, sure, those weeks, those months, yes. You get those moments, and it doesn't matter how long you've been trading, you're always going to have that. And that's why I talk to you guys about the psychology so much. So important to understand the psychology of trading, because that's the one thing that's going to pull you through. End of the day is you, the trader. You, the trader, is what is the factor in your wins or losses. The factor behind the wins or losses is the trader. Nothing to do with the lines and the markets and the systems and whatnot that go behind it. It's all to do with you, the trader, at the end of the day. So let's see what's going to happen with US 500. Let's see if we get a long trade out of it or not. Okay, look, guys, it's been a couple of hours, so I'm going to head on, and I'm going to be on my way. There will be another great video tomorrow for you, which will talk about the markets. And then on Thursday, we're live again, and the live show on Thursday, especially for you guys, will be easier because it's later in the day. So for me, it's 2:30. So I think for you guys in the UK and Europe, and that's about 12:30. And in the USA, it's sometime early in the morning. And it just gives us a chance to have this chat again and talk about the markets and talk about particularly the psychology in it and the investing and all the rest of it. And I'll give us a good bit of subject matter on Thursday as well to chat about. And then Lawrence says, I built up a real profitable strategy on a 100,000 demo account. Last 4 months, my total gains were 34% yesterday. I bug it up by breaking my own risk management plan. Okay, so Lawrence, when you go into real money, just be aware that 34% gain you made on the demo might be more difficult to make with real money, okay? But good on you. Good show. It's a pleasure, guys. And thank you very much for being on board, being here today. I hope to see you guys all again on Thursday. I'm going to be off now, and I'm going to chat to you again on Thursday. And don't forget, like I say, come and visit and see tomorrow's video, because that's always, always cool. Thanks, guys. Till next time.